Nigeria's external reserves also dropped by $50.84 million from $35.75 billion as of October the 2nd to $35.69 billion as of October the 12th. Now, according to the figures from the Central Bank of Nigeria, the reserves, which had continued to rise and fall in recent weeks, stood at $35.67 billion as of September the 1st and rose to $35.81 billion as of September the 17th. Now, the reserves also rose by $65 million from $35.59 billion in August the 20th to $35.66 billion as of August the 27th. It had earlier also lost $278.91 million from $35.87 billion in the month of July the 29th to $35.59 billion in August, which was the 19th, after which it returned to a growth path. Well, joining me now live in our Lagos studio to discuss these figures, I have the Chief Executive Officer of Finance with Mukhtar Mohammed. Good to have you on the breakfast show today.
Good morning, David. It's a pleasure.
Now, let's start with your thoughts on the dwindling external reserves. Quite a sharp drop, $50 million in 10 days, and we also have the twin report of a spike in inflation rate as well, hitting the highest level in 30 months at 13.71%. For many, this didn't come as a surprise. What are your thoughts on this?
Well, about the inflation rate, it didn't come as a surprise. You remember, it's still the pandemic issue flowing over because most farmers were not able to go to farm during the pandemic period. There was no movement of goods and services from other parts of the country to other parts of the countries, and so transportation also was also affected inflation because the cost of transportation also went high. And also the farming season came with its own challenge, flooding in some other states. And so it's not surprising then not to forget about some of the goods that we have, especially the cereal and the baby food products, exactly. Bread, and all this. Some of them have to come from, especially those cereal had to come from abroad. Then we have the challenge with the exchange rate volatility, and exchange rate going as high as 470 naira for a dollar to a naira, and most of these people were not given access to government intervention in terms of the forex from the CBN government rate, and if you not to forget that even during that period, government came up with a policy to ban those that are bringing in maybe maize from abroad from participating in the government forex activity. So that is also a challenge, and that make the cost of poultry products went up because these feeds are what turn out to be feeds for the poultry. So
okay, Mukhtar, let's take our minds back to the dwindling external reserves. Now, what do you make of the up and down pattern we've seen so far? It's quite a volatile season we are seeing with the rise and fall of our external reserves.
David, we keep having that as long as oil price remains at $40 per barrel, hovering between 40 to 38, 40, 38, 39. We'll continue to have those challenges. Then remember that these challenges were caused by three factors. One of them is the intervention in the secondary market, which they've not done for a very long time. So they started that also. Secondly, also it has to be with some payment of external borrowing also. They had to do that because that was a commitment they made. And also you need to look at also the import-export windows where investors were also exiting Nigeria, and they had to create that two-way export system. Have these things changes? No, there've not been any change. As the parallel market, especially the secondary market, as the rate of the exchange between the naira and the dollar comes down, no. So you continue to have the challenge until there is stability in terms of demands and supply.
What's your forecast for our external reserves at this point?
Well, I still believe that we'll still maintain where we are, especially in the next quarter is very critical. Depends on what CBN is able to do, like what they came out with the import-export window. I think now what they are trying to do is to cope inflation and run tipping in the forex market. If they are able to achieve that, then we will sustain the growth they will sustain this present level that we are. But if not, I think the reserve may drop to the lowest we've ever seen before.
Cautious optimism. Now, going by the pattern that we've seen so far with the rise and fall of our external reserves, do you think there's any mechanism we can put in place to ensure that we only sustain a growth trajectory at this point in time, taking cognizance of the fact that our major foreign exchange earner remains oil?
David, I wish they are thinking like that. This is the way we've run our reserves for over the years, over 40 years. It doesn't matter the administration, it doesn't matter whether it's military, whether it's civilian. We've always run our reserve the way we've always run it. That's how we've done it. Use what we got from our reserve, use everything in trying to maintain stability in our FX market. Then after that, we try to pay for imports. Before now, we use those same reserve to augment subsidy. So we've not changed in our approach. You've never seen our reserve whereby they're giving you details of our reserve, like what the CBN just came out with just recent about why the reserve gained down. They said intervention in the secondary market, payment of debt, external debt, also then investors that are exiting Nigeria. If you look from that data, you could not see anything like 1-point-something billion or 200 billion given to sovereign wealth fund for investment. So it has always been the way we've run our reserve. All our reserve is more or less for our consumption. We've not seen our reserve as a base for investment so that we can have a boomerang effect whereby we can say that the reserve have increased today because our investment in social sector is beginning to yield result. We don't do that. And so as we continue like that, we definitely will continue to have challenges with our reserves.
And what do you think this would impact on the economy?
It's going to impact negatively. Remember that we import virtually 80% of what we consume. Even if the government is saying, oh, we are trying to be self-sufficient in food production, we still import most of what we consume, especially household items, and then cereals for children also. So we'll continue to have those challenges. And again, to make matter not a little bit better against that, some of these companies or individuals that are involved in importation of these goods are no more having access to the forex from the CBN. So they have to source for it outside, and you know what it means to source for forex in the secondary market. They are buying at CBN, which is supposed to be giving them at 380, then they will source it outside at 470. So you don't expect them to sell less than that. So that is what is going to bring the cost of living high, and I don't see any time soon it will stop.
Doctor, just before I let you go now, let's also touch on the inflationary pressures we are dealing with at this point in time. The latest figures, 13.71%, and this is largely driven by the composite food index, which has gone up. At the end of the day, we see that this is one of the biggest challenges of the Nigerian economy. But how then do we now stem the tide in the short term?
Well, in the short term, the government have to look at opening up their strategic reserve because I expect them to do that earlier than now because of the pandemic, and the government promised to do that. And so they have to do that if we have to stem them, because it's not going to look anything better these planting seasons. And things didn't get better with the flood in some of these areas also. Then again, even if you look at the consumers front index, it's not really the food items that is the product, it's the cost of movement, of those goods from one state to another. And not to forget, the pandemic also has its role. The security challenges are still in the northeast. And then we expect even that to get worse for the past 1 week with the NSAT process that is going on. So it's not looking good.
Hopefully we just try to maneuver our way through all of these indices we have at this point in time, manage all of the inflationary pressures, and get the economy back on track, because the hardship is quite intense at this point in time for the average Nigerian. Thank you very much for your time on The Breakfast Show today, Mukhtar Mohammed.
Thank you, David.